It is a stormy day here on Florida's Space Coast. Not only has it been raining cats and dogs for a couple days now, with plenty more on the way, but you may have heard the news that a Russian submarine is patrolling just 30 miles off the coast. Well, that's right here too. But the weather and geopolitics are not the only thing that have been erratic. We'll get into that and more on this episode of the Bitcoin Bulletin Podcast. This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Hello, you sexy sat stackers, and welcome to the latest episode of the Bitcoin Bulletin Podcast. As I mentioned, it is a really stormy day here on Florida's Space Coast. It has been raining for the last couple of days. Not quite as bad as it has been down in Miami, where they've gotten just feet of rain in the last 3 days. All of that is because a tropical storm is trying to spin up. It's kind of started in the Gulf, and now it's moving over Florida, over central Florida, and getting ready to head out into the Atlantic. And who knows whether that'll form up or not. But as a result, it's been spitting tons of moisture into Florida. And because it's it's not even a tropical storm, but because it's not like a hurricane where it has a really tight eye, a tight center of circulation, most of the rain isn't exactly where the center of the circulation is located, but usually off to the south and east, or in this case, due south of us. But we've still gotten tons of rain. I used to like to joke that we have a lake in our backyard, Lake Macayo, I like to call it. We've had that for sure. I definitely haven't had to water any of the plants, water any of the garden, and that's been great news. But I digress. We do have a lot to get into today. Before we get into all of it, though, let's take our customary look at the vital statistics. At the time of this recording, we are sitting at a block height of 847,645, and Bitcoin is ringing in at a US dollar value of 68,160, or 1,467 sats per dollar. That is a little bit less expensive in fiat terms than last DCA Wednesday, but pretty much right in line with that up and to the right trend that we see if you just simply zoom out. Of course, we ain't seen nothing yet because traditionally the new all-time high isn't set until 6 months to a year after the halving. So we kind of got a really cool surprise pump from the ETFs and an excitement coming into the Bitcoin market from the traditional financial world. But hold on to your hats, because if history repeats or even rhymes, we shouldn't really get things cooking until this fall, and that's when things are going to get absolutely face-melting. I, for one, thoroughly believe that we have not shaken that 4-year cycle yet. You know, people either claim that this is the last cycle or the last cycle was the last cycle, that the 4-year cycle is over, and that's either because they're incredibly optimistic and they say we're going to get the super cycle where we no longer have a retracement, we no longer have bear markets, we just continuously go up and to the right because so many people have poured into Bitcoin and hyper-Bitcoinization is just around the corner. And then you have the negative Nancys that say we've seen our last cycle because of the whole diminishing returns theory, that so much money has been pumped into Bitcoin now that it just takes a lot more money to move the needle, so to speak. So we shouldn't expect a gigantic pump like we have in the previous cycles. I think that's all hooey. I think we have at least one more big cycle, one more 4-year cycle ahead of us. A lot like Dr. Jeff Ross, I believe that the last cycle was artificially depressed a little bit because we had what happened in 2020, right? 2020 was certainly not a normal year. And then we had the Chinese minor ban and a lot of other FUD that helped nip the top off, give us that double top instead of one gigantic top. So I think we're going to make up for lost time. Only time will tell. Nobody has a crystal ball, so even I don't really know. I just have that belief, a belief that I believe I share with most of you. But I digress. Continuing on the vital statistics, Bitcoin's current price gives it a market capitalization of $1.34 trillion, still solidly above that $1 trillion market cap that makes Bitcoin truly a force to be reckoned with, definitely solidly in the top 10 currencies by market cap worldwide. And of course, even if Bitcoin only lives up to the hype as Bitcoin's digital equivalent of digital gold, if it just becomes an equal with gold, not even surpasses gold, we'll see a market capitalization of closer to 15 trillion before it's all said and done. And obviously, if you believe in the everything divided by 21 million theory, if you believe in hyper-Bitcoinization, that will just be the tip of the iceberg. And speaking of those of you who value your wealth in shiny yellow rocks, if you do value your wealth in gold, it will currently cost you 29.4 ounces of gold to purchase just one Bitcoin. I keep meaning to add a sound effect to my soundboard. I have a soundboard here in the studio, but I don't have any of the fancy schmancy sound bites or things like that people like to add to their soundboards to cue up sounds at the press of a button. And I keep meaning to, if I ever do, to add the sound of like a gold coin dropping. But I think it would get kind of redundant and boring really fast to play that sound 29 times or 30 times or 36 times or however many times once per ounce of gold it'll take you to purchase Bitcoin as we continue to set new highs, as gold continues to trend to zero in Bitcoin terms. But once again, I digress. For those of you who value your wealth in pizza, one Bitcoin will currently purchase you 3,812 large pepperoni pizzas from Papa John's. A far cry better deal than Laszlo got for that first real world purchase, where he purchased 2 Papa John's pizzas for 10,000 Bitcoin, more than $700 million all those years ago. We spoke about that less than a month ago on the 14th anniversary of Bitcoin Pizza Day. So once again, a tip of the hat to Laszlo for kicking it all off, because who knows where Bitcoin would be if it weren't for him and for people like him making those first Bitcoin purchases. Along those lines, if you are one of those people who doesn't like to spend your Bitcoin, and I am guilty as charged of being one of those people, don't forget, spending Bitcoin is what helps, drive the Bitcoin adoption, helps create a circular Bitcoin economy. And just because you spend your Bitcoin on a purchase doesn't mean you can't buy and immediately replace that Bitcoin. Of course, if you're like me and it just really hurts to see the number of Satoshis in your wallet go down, you can always still support Bitcoin merchants by sending them Bitcoin by services such as, Strike, which will let you pay from a US dollar balance, but the sender will receive Bitcoin and they won't know any better. They'll get sats. And that'll encourage your favorite merchants to keep accepting Bitcoin and maybe help encourage more merchants to accept Bitcoin if you're paying in Bitcoin. But you really should be spending in Bitcoin and then replacing the Bitcoin that you spend out of your wallet if you really, really, really want to truly encourage a Bitcoin economy. Okay, that metric that has been my favorite metric for most of this podcast history, Bitcoin's 24-hour average transaction rate, is just screaming, currently averaging 7.96 transactions per second. I think that's just about as high as we've ever seen it. I'm scrolling back through my notes, and I don't think we've ever seen it hit 8. Of course, before Taproot and before the ordinals, inscriptions, stamps, etc. shenanigans, the spam transactions that are basically just writing data to the witness section of a Bitcoin transaction happened. If we ever saw more than 3.15 or 3.5 transactions per second, that was usually indicative of just absolute face-melting activity on chain anyway. So, that metric, as I've lamented multiple times on many different episodes of the Bitcoin Bulletin Podcast, is potentially a worthless metric now. But I've yet to discard it because, we've seen the spam subside, and then of course, coinciding with the halving, we had an additional spam attack launched on the network, so it bumped back up again. And I guess it would be unreasonable to expect it to completely disappear, because there's always a new scammer. As they say, there's a sucker born every minute, and because of that, there's a scammer born every minute to take advantage of them, or to try and take advantage of them. And likewise, we always see the altcoins really start pumping on Bitcoin's coattails once we get to the halving and we start our next face melting bull run. So, like we'll probably see in alt season, we'll also probably see ordinals and inscriptions be trendy until unfortunately, until the next bear market, or at least till the next peak, and we have a bit of a retracement. But who knows? And so for the meantime, I'm going to continue to keep following that metric because I think it's useful. If nothing else, it shows you how much activity is going on out there on chain. And speaking of on-chain activity, Clark Moody's dashboard mempool is showing that there are 184,398 transactions pending in his mempool. That's down almost 70,000 transactions from last DCA Wednesday. Not quite as low as we were 2 weeks ago, but settling back into more of a normal range. Mempool.space usually tells a slightly different story with a slightly larger mempool. They're showing 278,695 transactions pending in their mempool, but that's still down about 70,000 transactions from where we were last week. A family member of mine just got home from a really cool trip to Japan and Thailand. Spent the last week in Thailand, and when they came home, they brought something with them because the whole family now is starting to get a little stuffy. I have a really sore throat, and I'm having a hard time keeping my sinuses clear. So if I'm choking up on my words, or if my voice sounds a little more nasally than normal, that's probably why. I'm not feeling that bad. I'm feeling pretty good. So hopefully we'll get a good podcast going. But I'm having to swallow a lot. I feel like I got something stuck in my throat, and so half the time I'm choking up on my words here or pronouncing things weird. It's not my normal trouble that I have on the podcast. It's that I'm my throat feels like there's a lump in it, and I'm swallowing. I'm choking. I'm literally choking on my words this time. All right, where was I? We're talking on-chain activity. All of that on-chain activity means it'll be pretty darn expensive to do an on-chain transaction, although not as expensive as last week. Clark Moody's mempool is suggesting that if you have to do an on-chain transaction and that you want to guarantee it's included in the next block, you need to include a fee of 42 sats per VByte. If you have a little bit longer to wait, they're saying a fee of 20 sats per VByte will be mined within a day. And they're still showing a fee of just 7 sats per VByte will be mined in a week. Mempool.space is telling an almost identical story. They're recommending a fee of 41 sats per VByte to be included in the next block. That works out to about $3.90. A lot cheaper than last week when they were recommending a fee of 45 sats per VByte, and Clark Moody was recommending a fee of 106 sats per VByte. Mempool.space is saying a medium priority transaction should still include a fee of 36 sats per VByte, and a low priority transaction should include a fee of 31 sats per VByte. Of course, a no priority transaction, the lowest fee they recommend, they still recommend 14 sats per VByte, which is more than double what Clark Moody's fee estimator is recommending. So if you have to make an on-chain transaction, a priority on-chain transaction, check mempool.space, check Clark Moody's dashboard, and make sure you're not overpaying, but make sure you include a fee that will reasonably be mined, and that certainly not one that is below the minimum fee, where mempools will just flat out start purging your transaction. And of course, don't forget to use a wallet that will allow you to use replace by fee or child pays for parent, or otherwise be able to bump that fee up if your transaction does get hung up in the mempool. Since last DCA Wednesday, the difficulty it takes to mine a block of Bitcoin it actually decreased. And last DCA Wednesday, we were talking about how it was going to be a decrease of about 0.15 to 0.2%. And that was a huge change up from the 2.8 to 3.9% increase that it had been forecasting. And in fact, we ended up with almost a 1% decrease, a 0.8% decrease. And that happened about 49 blocks after the next DCA Wednesday episode. So as a result, we're about halfway between difficulty adjustments. As you're aware, the Bitcoin Core protocol adjusts the difficulty that it takes to find the next block, theoretically, every 2 weeks, but it does so every 2016 blocks. We just refer to it as every 2 weeks because people like to think in human times, just like they refer to the halving as once every 4 years, when it's every 210,000 blocks, regardless of how long that takes, not once every 4 years. And so we're 1,051 blocks away from the next mining difficulty adjustment, so just a little under halfway. And that'll happen sometime around June 20th, so about 7.5 days from now. And it's, well, depending where you get your estimations, it's going to be, they're all over the chart. One source I'm looking at says it's going to be another difficulty decrease of 1.5%, and another says it's going to be a difficulty increase of 1%. And that is because, the increase is because blocks are currently averaging 9 minutes and 53 seconds, which is faster than the 10 minutes that Bitcoin shoots for. Anytime blocks are coming in faster than 10 minutes, difficulty goes up to try and slow them down. If they're coming in slower than 10 minutes, difficulty comes down to try and speed them up. But we've had a hash rate seesawing, probably because of that record heat wave, that heat dome we had over Texas, where some of the largest miners in the world, like Riot, are located in Rockdale, Texas, for example. And we spoke about that last week, where more than 20 exahash had come off the network presumably as a result, or at least partially as a result of miners selling their power back to the grid to help balance the load. And so as a result, the estimators are having a difficult time figuring out whether we're going to have a decrease or an increase. And of course, as we demonstrated last time, they were showing that it was going to be a huge increase, then it was going to be a slight decrease. We ended up getting a fairly significant decrease, and you're just not going to know for another 1,051 blocks. And of course, that really only matters to you if you're a miner, whether or not your mining is going to get more or less profitable, because if you're sending a transaction, of course, transactions don't come in once every 10 minutes. They come in once every 10 minutes on average. For example, it's been 25 minutes now since the last block was mined, and sometimes you get 2 blocks within a minute. It's really like flipping a coin. But if you flip that coin 2016 times, you should get, well, you would get half heads, half tails. But in this example, you should get an average of about 10-minute transactions. So if you're a miner, that makes a difference for you. And if you're not, it's really kind of a coin flip whether how long the next block is going to take, if you've paid a fee significant enough to be in that next block. Either way, most of you should probably be doing your transactions on the Lightning Network when fees are as expensive as they are, especially if you're doing things like purchasing coffee from Good Beans in El Salvador, for example, over the Lightning Network, because we don't want to pay $3 in fees for a $10 transaction. Obviously, if you're making a really, really important transaction, like, well, moving Bitcoin to cold storage, obviously would be an on-chain transaction. But if you're buying a house or a car or paying some big priority sum of Bitcoin that you need to make it on-chain, just make sure you're following that you're abreast of what the current transaction fees are, and you don't get overcharged. Because I'm looking at the Block Explorer out there, and there's a lot of people really, really, really overpaying for their transactions. I mean, gigantically overpaying for their Bitcoin transactions. So I usually set a fee under what the no priority transaction is, but above what the purge limit is, because I know that the mempool tends to clear out. Transaction fees tend to go down when it's nighttime in the United States or Europe or on the weekend. And if I'm just moving Bitcoin to a hardware wallet, or consolidating transactions, I don't care if it takes 2 or 3 days to go through, as long as I see it in the mempool and I know I didn't screw up, right? Speaking of consolidating, one of the reasons we use Cash App is because they let you transfer your Bitcoin to your hardware wallet without a mining fee. And that can be, that can save you a significant chunk of change. For example, if you were to pay $3 or $4 for that mining fee, that makes up for the fact that they charge a little bit more for their fee to purchase Bitcoin. But I transferred some Bitcoin to my hardware wallet last week, and always, I have never had it take more than a block or two for my transaction to get mined. I've always seen it show up in the mempool right away. And this time it didn't even show up in the mempool for like 3 blocks. And then it took a little over 24 hours for that transaction to be confirmed, which was fine. I don't care because I knew it was in the mempool and I knew it would confirm eventually. And it didn't bother me because it's going away to cold storage. I'm not touching that coin ever. So the fact it took a day to get there, is no big deal. But that's the first time I've ever seen that happen with Cash App. So that's just indicative of how crazy things have been on chain. But again, I'm getting off on a tangent. Before we get on with the news, I want to take a minute to thank those of you listening on your favorite podcasting 2.0 apps, such as Fountain and Breeze. Fountain, for example, will let you earn sats for listening to your favorite podcast. For example, I earned 10 sats last night for listening to the Cafe Bitcoin podcast on Fountain. That's kind of random. When you first log in, it determines what you're going to earn or not earn for the day. Sometimes you won't earn anything. Other times I've earned 100 sats for just for listening to a podcast. But I'm not going to turn my nose up at 60 sats or 10 sats or even 1 Satoshi, because I firmly believe that one day what you might think of as dust is going to be like a couple years ago, or more like 10 years ago, when they used to have the Bitcoin fountains where you could get 5 Bitcoin just once a day just for visiting a website. And that was worthless basically at the time. People were giving it away just to help spread Bitcoin around. It was just pennies, if even pennies worth of Bitcoin. And I think the same thing one day will happen with Satoshis when for example, when we go to 100,000 Bitcoin, Bitcoin will be on the when we go to 1 million Bitcoin will be on Bitcoin Satoshi parity, where one Satoshi will be a penny. So, 25 sats for listening to a podcast is a quarter. Most people, they see a quarter on the ground, will stop and pick it up. And then if Bitcoin hits $100 million, and remember we spoke about Fidelity predicting $1 billion Bitcoin, and they're not the only people predicting greater than 100,000 Bitcoin one day. If Bitcoin does hit $100 billion, then we're talking Satoshi parity. So $10, for listening to a podcast, all of a sudden that's money that you wished you hadn't turned down. So it's really cool that you can earn sats for listening to your favorite podcast on Fountain. But perhaps more importantly, you can also help support your favorite podcast through the value for value model. For example, a lot of people choose to stream sats on a per minute basis. So for example, if you are listening to this podcast right now on Fountain and you feel like I'm giving you 1 Satoshi per minute value for listening for this podcast, for this content, you can set it to stream 1 sat per minute to the Bitcoin Bulletin Podcast. If you think it's worth 10 sats per minute, you can set it to whatever your heart desires, whatever you feel it is worth your time and effort for listening to this podcast, the value that I'm providing, talking to you every Wednesday. And perhaps my favorite method of value for value is you can send a boost. And this is not streaming sats on a per minute basis. This is a one-time deal, kind of like a smash buy. When you smash buy Bitcoin, it's a smash boost. And it's basically a good old-fashioned shout-out. Like, for example, one of my favorite podcasts used to sell shout-outs. And you could pay them, I think they charge like $25 or $50 for a shout-out because they're a pretty popular podcast. This is similar. You can send a message, a shout-out to the podcast, but it's a boost. So it's a Lightning transaction. So you're sending Satoshis. And so you can send whatever you feel is an appropriate boost amount for however much value you feel I'm providing you while you're listening to this podcast. And let me know what you think about the podcast. And of course, when we receive boosts, we read those on the next episode of the podcast, unless you explicitly ask me not to. Keep in mind, though, even if you don't want me to read your boost, they are appended as show notes to people when they're scrolling through the show notes on Fountain. You'll see those boosts on Fountain, so they're not private by any stretch of the imagination. But they help support your favorite podcast through the value for value model, and that's where you determine the value the podcast is providing to you in lieu of podcasts selling commercials, selling advertisement, shilling products, hawking products, trying to get you to purchase something from some company, whichever rando company happens to be sponsoring those podcasts. But I digress. Of course, the fastest and easiest way you can support the podcast is by helping feed that algorithm monster. Along those lines, please give us a follow on Twitter or X or whatever you're calling it. I still like to call it Twitter. I think a lot of people do. On X, we are at BTC Bulletin Pod. And the more people we have following the Twitter handle, the more likely our tweets are to show up in people's feeds. We don't spam tweet. We put out very rarely do I tweet anything, but I do tweet when we have new episodes, and I tweet things that are pertinent. Sometimes I'll tweet links to the articles that we're discussing in the podcast. So you can go through and have those handy and read those yourself. Most importantly, though, it feeds that algorithm monster and helps spread the word about the podcast and helps spread the word about Bitcoin. Another really great way you can help support the podcast is if you rate or review this podcast. This varies from app to app. But for example, if you're listening on Spotify right now, what you would do is go to the podcast page and then click on the little 3 dots that are next to the little settings gear icon. Then click on Rate Show, and it's simply a matter of selecting the number of stars that you want to rate the podcast. Of course, 5 stars would be immensely appreciated, but obviously I want you to give us a fair rating, whatever you feel, however you would like to rate the podcast. But the most important thing is that simply rating this podcast helps feed that algorithm monster and bump this podcast up in the rankings, not the listenership rankings, but in the algorithm rankings. Now, hopefully that'll help more people be exposed to this podcast, and more people hopefully will become orange pilled, or at least learn that they can DCA into Bitcoin, that they don't have to buy a whole Bitcoin, because that's still a really commonly held false belief that a lot of normies have. They think, I can't buy Bitcoin because I don't have $70,000. And one of the things that we illustrate is that you can buy any amount of Bitcoin. We buy just $20 worth of Bitcoin every week. And so a lot of people that don't know that, by being exposed to this podcast and the concept of DCA, they might already want to purchase Bitcoin. They might already be semi-orange pilled. They just haven't done enough research yet to know that they can convert any amount of fiat into Bitcoin. So you'll help a pleb by helping the podcast. Of course, if you are listening on Apple Podcasts, don't forget they disabled automatic downloads. So even if you were automatically downloading this podcast every week, so if you're on an airplane or someplace where you don't have internet, you can just go ahead and listen to it. If you were not listening to more than 2 episodes a week, like 2.5 episodes a week, they were turning off your automatic download. So if you're listening to Apple Podcast, again, rate and review the podcast. And don't forget to make sure those automatic downloads are still enabled. Because, obviously, if we only put out one podcast a week and then occasionally a bonus podcast like a weekend update or whatever, that's still less than 2 podcasts a week on average. So most of you have probably had your automatic downloads turned off. That's something they started doing at the beginning of 2024. I think if you've turned them back on, they should probably still be turned on. It didn't specify whether that was a one-time sweep or if they're going to do it periodically. So it doesn't hurt to check. And again, that will help feed the algorithm monster. The more downloads we have queued up, the more likely this podcast is to be featured to people who might not otherwise have heard of it. And speaking of our listeners, our geographic distribution listeners remains the same as last week. As usual, most of you are listening from the United States. More than half of you are listening from the United States. So thank you to my fellow Americans listening from right here in the good old United States of America. Number 2 remains Argentina. So muchos gracias, amigos, in Argentina. Number 3 remains Germany, so Dankeschön, mein Freund in Deutschland. Number 4 remains Canada, so thank you to those of you listening to the north of us in America's attic or America's hat, depending on how people sometimes good-naturedly refer to it. Number 5 remains Luxembourg, so again, muchas gracias. Hey, muchas gracias, amigos, in Luxembourg, if you happen to speak Spanish, but Dankeschön, mein Freund in Luxembourg. Or Morien, for those of you who speak Luxembourgish. Number 6 remains Spain. Muchas gracias, amigos in Spain. Number 7 remains the United Kingdom. So thank you to those of you across the pond in jolly old England. Number 8 remains Venezuela. Again, muchas gracias, amigos. Number 9 remains Colombia. Bienvenidos. Muchas gracias, amigos in Colombia. And of course, number 10 for the last couple of weeks has been Mexico, who broke into the top 10 about a month ago now. Perhaps in relationship to my call where I had been pointing out that Mexico had been lingering at number 11 for like a year, and that it would only take a listener or two to bump them into the top 10. Well, they did, and number 10 remains Mexico. So again, hola, muchas gracias, amigos in Mexico. And thank you to all of you listening, regardless where you're listening. I mentioned that family member had been had been traveling abroad, that they had been in Japan and they had been in Thailand. And we do have listeners in both Japan and Thailand as well. We have listeners in many, many, many countries, and that is really, really flattering because, Bitcoin is international. Bitcoin is for everyone. It's not just for those of us here in the United States or in Europe. And it's really cool to see that there are people listening from all over the world. So thank you, regardless of where you may be listening. And of course, even if your country is not in the top 10, just like I mentioned with Mexico a couple weeks ago, there's a few countries lingering just below Mexico at the number 11, 12, 13 spots. So where if you were to, maybe tap a friend on the shoulder and say, hey, check this podcast out, give it a listen, especially if they're a Bitcoiner or a family member, maybe you can bump your country into the top 10. It probably really wouldn't be that hard. In many cases, it's probably only a listener or two to make that difference. All right, on to the news. I wanted to lead the news section off with a reminder of why we are Bitcoiners, because oftentimes we get distracted with either the super positive or the super negative, and we can dwell on the minutia, on things that really won't matter even next DCA Wednesday, let alone years from now. So I wanted to remind us why we fell down the rabbit hole in the first place. With all that's going on in the world, with all the excitement and the drama that can come with the looming post-halving euphoria phase, that epic face-melting bull run, which I firmly believe is coming in the next few months, it is important to keep a few things in perspective. Because as Bitcoin does begin that face-melting run to new all-time highs, that's pretty much all anyone's going to be talking about and focusing on. And that'll last. Well, normally, that should last into 2025, most of 2025. Usually, we have about a solid year of just up and to the right. Maybe not quite as euphoric as when we're reaching that new all-time high, like in 2017, for example. We had the 2016 halving, and then Bitcoin kind of started going slowly up and to the right, leading into the summer of 2017. And then I think we were about $1,000 a Bitcoin. And then by August, we were about $4,000 per Bitcoin. And then Then all of a sudden, like October, we shot up to $10,000 per Bitcoin. It was going up like $1,000 a day before peaking out at about 20,000 that cycle, and then rapidly falling off back into the teens as we began the crypto winter, the Bitcoin bear market. But usually that in general, that bull run lasts about a year. And during that time, that's all you're going to hear about, including the proverbial, when you hear about Bitcoin from your Uber driver, when you hear about it from your waiter or your bartender, those are usually top signals. But I digress. Why are we Bitcoiners? We're Bitcoiners because Bitcoin is hope, because Bitcoin is that lifeboat, because as Christine Lagarde so infamously called it, Bitcoin is an escape hatch. What's in an escape hatch from? It's an escape hatch from currency controls, from authoritarian monetary policy, from things like social credit scores that determine how much you can purchase of a certain subject or certain product. For example, it wouldn't be too unusual to assume that they would apply currency controls to your quote unquote carbon footprint, maybe keep you from purchasing too much gasoline or keeping you from purchasing too much red meat, or in China's case, preventing you from traveling if you've posted something negative on social media. Unlike fiat, Bitcoin cannot be censored. You can spend it on whatever you want. You can send it to someone in whatever country you want. You might ultimately get arrested if you send Bitcoin to Cuba or to North Korea, but nobody can stop you from doing so, even if they can punish you for doing so. Bitcoin can't be censored like the donations in fiat were to the Canadian truckers, for example. The Canadian truckers were raising money on GoFundMe and on GiveSendGo, and they had all that money seized. It never made it to the truckers, but most of the Bitcoin did. And there were some mistakes that the people that were collecting Bitcoin for the trucker convoy protest made that I think were lessons learned that won't be repeated the next time. So all of the Bitcoin will get to truckers. For example, they were kind of doxing the truckers because they were worried they would be accused of stealing the Bitcoin, of pocketing it, of siphoning it off. So anyway, I'm digressing. Basically, Bitcoin can't be censored, and it's not subject to social credit scores or carbon footprint caps, amongst other things. But don't forget, Bitcoin also banks the unbanked. For example, it was former President Barack Obama who called Bitcoin a Swiss bank account in your back pocket. Of course, he meant this in a bad way. He wasn't complimenting Bitcoin, but to those of us who are Bitcoiners, it was sure as hell a compliment. He was warning about Bitcoin's ability to subvert central planning, to subvert AML and anti-money laundering and know your customer laws. But he was wrong in calling it a Swiss bank account, as Andreas Antonopoulos used to remind us back in the day when Andreas was pretty much the number one Bitcoin podcaster, the number one Bitcoin evangelist, going around the world telling empty rooms from way back in the day. People, 2 or 3 people in rooms listening to Andreas Antonopoulos tell us that Bitcoin was the future. But as he used to tell us, owning Bitcoin is being your own bank. So Obama got that one thing wrong. It's not like having a bank account in your back pocket. It's like having a bank in your back pocket. Many of us got into Bitcoin, of course, because we saw quote unquote number go up. And it's always, it's always been, and I firmly always believe always will be something that goes up and to the right. As Michael Saylor famously said, Bitcoin's going to go up forever, Laura, forever. But once you did that 100 hours of research, started, reading some books, listening to some podcasts, then that orange pill took hold, and we realized that Bitcoin is so much more than just a number go up technology, that Bitcoin is hope, that Bitcoin is that lifeboat for when fiats either become incredibly authoritarian, which they're well on their way to doing so, or flat out crumble, if they hyperinflate away and collapse. Bitcoin, that's when Bitcoin will truly be that lifeboat, when you will need Bitcoin the most. All right, on to the news. The big news today was the Federal Reserve's meeting and interest rates, or the BS statistic of what CPI is reported by the government coming out. And of course, as we mentioned last week, the Bank of Canada led the way by cutting interest rates by 0.25%. And then the next day, the European Central Bank cut its rate 0.25% from their all-time high of 4% to 3.75%, which was their first cut since 2019. And there's always been speculation about the Fed pivot, the Powell pivot. When will the Fed stop raising rates and begin cutting rates? Obviously, that didn't happen today. In the United States, the Federal Reserve kept rates unchanged, But they also revised their forecast downward. Previously, they had been forecasting up to 3 rate cuts by the end of 2024, and now they're forecasting only 1 rate cut coming. Of course, I think this is all just a distraction. What really matters is that you're stacking sats. But CNBC, for example, reported the headline, Fed holds rates steady, indicates only 1 cut coming. The Federal Reserve on Wednesday released its decision on interest rates following this week's policy meeting. The Federal Reserve on Wednesday kept its key interest rate unchanged and signaled that just 1 cut is expected before the end of the year, with markets hoping for more accommodative central bank. Federal Open Market Committee policymakers, following their 2-day meeting, took 2 rate reductions off the table from the 3 indicated in March. The committee also signaled that it believed the long-run interest rate is higher than previously indicated, so maybe giving some wiggle room to not try and get rates back down to not get inflation back down to 2%, but people thinking maybe adopting a 3% interest rate. But either way, the higher for longer narrative has been it's been what I've been expecting. I don't know why people have been so dead set on the Fed cutting rates in June or even previously cutting in like March. There's been no indication that they were going to cut rates. And quite frankly, 5% interest rates, that might seem high because we've been used to basically free money for the banks since 2008. But I'm not a boomer, but I'm old enough to remember mortgage rates, interest rates being a heck of a lot more. 7, 8, 9, 10% was not unusual for most of the history of the United States as a fiat dollar. Of course, they were a lot higher after the inflation of the 70s when they were more like 18%. But I digress. The decision on interest rates didn't seem to bother traditional financial markets. They must have been expecting it as well because stocks obviously are still near all-time highs. The NASDAQ and the S&P 500 are continuing to go on set new all-time highs. Bitcoin, on the other hand, pulled back to as low as $66,000 yesterday, with many questioning Bitcoin's price performance despite the huge inflows into the spot Bitcoin ETFs. Spot Bitcoin ETFs had soaked up more than 10 times the supply of newly mined Bitcoin the other day. Routinely, they've been soaking up 2 or 3 times more Bitcoin than is new Bitcoin that is mined on a given day. But nonetheless, the price action hasn't been what people have been expecting. Many people would have expected $100,000 Bitcoin by now. I, of course, have not. I've been expecting that Bitcoin would do what Bitcoin always does, and that we wouldn't go on that face-melting bull run until more like next Thanksgiving or next Christmas time. But of course, I'll be pleasantly surprised if we do. Hodlonaut put things into perspective when he tweeted yesterday, Bitcoin markets anxiously awaiting the sacred words from the high priest of fiat, parentheses Powell, and the cooked inflation numbers, parentheses CPI, of a system in late stage failure, to know how highly they shall value the asset that sets them free from it all. Doesn't really make sense. And Hodlonaut has a point. Of course, Hodlonaut is the space cat that you know most famously probably from being sued by CSW for calling him a fraud. But if you're not following him on Twitter, he's at Hodlonaut on Twitter. He always has some interesting insight and some interesting takes on Twitter or on X. For the most part, the ETF inflows have been off the chart. I mean, literally, they've been routinely buying up multiples of the new Bitcoin supply, as I just got done saying. Yesterday, however, the ETF flows were heavily negative. I think it was the second day in a row of negative inflows, and it was, not the first time that it's been in negative, but the first time in more than a month. Whale Panda tweeted, "Good morning. Yesterday's ETF flows were negative for $200.4 million. Big outflows from GBTC for $121 million and ARK for $56.5 million. Price went further down from 68 to 68.3K, now sitting at 67.5K. Today, there is a lot of macro news, CPI and FOMC, blah, blah, blah." It continues. Post a chart of the Bitcoin ETF inflows. Again, I want to point out this was only the second negative flow day in about a month, with more than $15 billion in inflows in total since the U.S. spot ETFs launched. And that's despite $18 billion flowing out of GBTC once it converted from a trust to an ETF, and people were finally able to escape GBTC. It's been largely responsible for almost all of the negative days that we've had. So in general, most of the ETFs have had huge positive inflows. Of course, since some of that did come from people rotating out of GBTC, it is fair to include it, I suppose. The other big news is continues to be the news surrounding the campaign for the upcoming presidential election and the upcoming congressional elections. And we've spoken at length about Bitcoin becoming an increasingly important political issue, certainly as far as the U.S. presidential elections are concerned. And that trend continued with Donald Trump taking to social media to further solidify his position as pro-Bitcoin. Forbes reported yesterday, Trump says all Bitcoin mining should be in the U.S. in his latest embrace of crypto. Quote, "We want all the remaining Bitcoin to be made in the USA," Trump said on Truth Social, attacking Biden's crypto hatred. He says he says will help U.S. enemies like China and Russia. So, they say infamously that it's not the party of red, it's the party of the blue, it's the party of orange. But increasingly so, we see the Democrats in the United States lining up as anti-Bitcoin, and the leading presidential candidate, the presumptive nominee. I say presumptive because he's already won enough delegates to secure the nomination. It just won't be official until the Republican National Convention. But unless something happens, Donald Trump will be the Republican candidate running for president in November. And he is lining up squarely pro-Bitcoin, which is really cool to see. Of course, there is an independent third-party candidate running out there who had been a Democrat, RFK Jr., as you're probably familiar with, and he is pretty pro-crypto as well, pro-Bitcoin, pro-crypto. He has some other issues. I'm old enough to remember when RFK was considered a radical leftist. He's very anti-Second Amendment. He lines up solidly on the left on most social issues. So there's many, many, many reasons why I would be uncomfortable voting for RFK. But it is important to note that Trump is not the only pro-Bitcoin candidate out there, although he's solidly going hardcore orange, which is kind of funny because he was always referred to as Orange Man. So now we have Orange Man as the orange candidate. FoxBusiness.com also posted about 12 hours ago, Trump calls Bitcoin last line of defense against centralized digital currency. Former President Donald Trump called Bitcoin a key route to energy dominance, as well as the, quote, last line of defense against a centralized digital currency controlled by the U.S. government. So that's really cool. Not only is he pro-Bitcoin, he's also solidly come down anti-CBDC. For those of you who are Bitcoiners, you probably know just how dangerous central bank digital currencies are, because people like Klaus Schwab of the Bank of International Settlements and like the Chinese government, the Chinese Communist Party with their digital yuan, like to be able to use money as a weapon. Klaus Schwab famously lamented that they have no idea what you use a $100 bill for, a paper bill. They can't control it. But with a digital currency, they'll know exactly what you spend every penny on, and they'll be able to control what you can spend every penny on. And so CBDCs are a tool of oppression and a tool of central planners and a tool of authoritarianism. And Donald Trump promises to be firmly against CBDCs. Last little bit of news I want to point out, or I want to get into before we get on to why we're really here today, is the round of corporate mergers and shenanigans going on in the Bitcoin world. And this is only really important because it shows, I think, that Bitcoin is officially and forever going mainstream financially, because people are starting to pay attention. Companies are starting to get into Bitcoin, and when they get into Bitcoin, you start things like mergers and acquisitions. No BS Bitcoin reported, for example, Robinhood to acquire Bitstamp, a $200 million deal. Robinhood Markets Inc. will acquire the European cryptocurrency exchange Bitstamp for $200 million as a part of its strategy to expand beyond the U.S. market. The deal is anticipated to close in the first half of 2025. So really that has absolutely no effect on Bitcoin in the long run, but it just goes to show that that big money is getting involved in Bitcoin, that they're taking it more seriously, and that they're trying to fit Bitcoin into they're trying to fit the round peg of Bitcoin into the square hole of the normal corporate world. Along those lines, No BS Bitcoin is also reporting on the attempted hostile takeover of Bitfarms by Riot Platforms. Riot Platforms has made multiple attempts to purchase the rival miner Bitfarms, and apparently Bitfarms has adopted a poison pill strategy to fend off the hostile takeover. The article continues, Bitcoin miner Bitfarms announced on Monday that it has adopted a poison pill strategy to guard against a potential hostile takeover by rival Riot Platforms. The move aims to make the integrity of its previously announced strategic alternative review process, the firm said. So a poison pill is another one of those traditional financial terms, traditional financial world strategies where, well, poison pills can be a lot of things, but basically it's a clause that says that the company promises to do something absolutely horrific in the event of a takeover. Sometimes they build in poison pills if someone founds a company and they go public and they're worried about losing the control, whereas they'll have to be given a golden parachute of some gigantic amount of money that the company couldn't afford if they were to be fired or forced into retirement or whatever. Either way, it's a traditional corporate fiat game that traditional Wall Street plays, and we're finding it integrating itself into Bitcoin companies as Bitcoin companies become more quote unquote mainstream. There's also two other merger news items listed on No BS Bitcoin that I'm going to gloss over real quick because I have a hard stop coming up I'm running up against. But basically the headline is Core Scientific declines $1 billion buyout offer from CoreWeave. So another attempted merger or takeover in the corporate world related to Bitcoin. And the other is BitDeer acquires Desi Miner, unveils Seal Miner technology roadmap. And basically Bitcoin miner BitDeer acquired ASIC chip manufacturer, I'm probably going to butcher this, Desi Miner, DESIWEMINER, following a $100 million investment from Tether. So plenty of corporate shenanigans finding its way into the Bitcoin world. Last thing I want to talk about before we move on to that dollar cost average segment of today's DCA Wednesday episode is also along the lines of TradFi. And of course, in clown world, the hilarity continues because everyone's favorite Nobel Prize winning moron, Paul Krugman, has yet another whopper. Of course, Paul Krugman is the one who famously quoted, by 2005 or so, it will become clear that the internet's impact on the economy has been no greater than the fax machines, and a bunch of other recent whoppers. But the day after last DCA Wednesday, he penned an opinion piece in the New York Times, called, quote, why you shouldn't obsess about the national debt. So whenever the government, the fiat maxis of the world, go on, their inflation tear, he declared recently that we'd already defeated inflation, for example. He was amongst those that said inflation wouldn't happen. Then, of course, inflation wouldn't matter. Then, of course, inflation isn't good. And now, of course, he says the national debt is no big deal as well. And that's just, obviously, it's BS, but it's what you expect from the fiat world. All right, on to why we're here, and that is because every Wednesday is DCA Wednesday. And if you don't know what DCA Wednesday is short for dollar cost averaging. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, this is going to be our 151st stack. Last episode was a heck of a milestone, marked our 150th stack, the 150th time we converted fiat into Bitcoin for this podcast. We started all the way back on Wednesday, July 28th, 2021. So with DCA being an investment strategy where you invest your money in equal portions, we chose our equal portion to be $20 because I wanted to do two things. I wanted to show that even if you can only afford $20 worth of fiat a week, that it would add up eventually, and that it would build you a stack of Satoshis that one day would be of significant importance to you. And our regular interval, of course, is weekly on Wednesdays. Again, those were both you do you things. Most people choose to DCA on payday. So if you're paid every Friday, then maybe you want to DCA weekly. If you're paid every other Friday, maybe you DCA bi-weekly. Other people DCA every day. Some people DCA hourly. There are services that will let you DCA every minute. I think maybe that's a little excessive. The important thing is that you pick a strategy and you stick to it. And by picking the strategy of investing just $20 a week, over those 150 stacks, we converted 3,000 US dollars into a stack of 9,424,800 sats. And we did so at a bargain now, an average cost basis of $31,830.91. Today, we're going to add to that stack. As I mentioned previously, we're going to use Cash App because I think Cash App is the easiest way to stack sats. They are not a sponsor of the show. I just love them. They do charge 2.25% fee plus a little bit of a spread. So they're one of the more expensive ways to purchase Bitcoin in the United States, at least. But again, as I mentioned, they will let me transfer that Bitcoin to my hardware wallet without a minor fee. So for example, if I was using Coinbase, if I paid a little bit of a cheaper fee, I'd still end up paying $4 or $5 in minor fees. So we're going to save, for $5 in minor fees by paying a 45-cent fee today. And obviously I'm not going to consolidate just $20 of the Bitcoin in my hardware wallet because That might end up being unspendable in a high fee environment. But even if you were to do $200 with a Bitcoin, which would be 10 transactions, that would be $4.50 in fees, which would only cancel out the miner fee that Coinbase would charge you. And Coinbase is also going to charge you a fee, albeit a slightly smaller fee. But I'm getting off on a sidetrack here. I already have Cash App open and I have $20 in Cash App already. So it's a simple matter of just tapping Bitcoin, tapping buy, entering $20, tapping confirm, and boom, just like that, we've purchased another 28,701 Satoshis. That's 1,000 sats more than we purchased just last week when Bitcoin was a little more expensive. So that is awesome. But perhaps more importantly, that has brought our total stack up to 9,453,501 sats. It did raise our average purchase price about $115. Our average cost basis is now $31,945.84, but still significantly cheaper than the $68,115 we just paid for those Satoshis. And that is really cool. All right, I'm going to wrap things up. But again, before I go, I just want to ask you one more time to reach out to you to help you support this podcast. Again, I'm not necessarily asking for you to help support the podcast financially. If you choose to stream us sats or boost us sats using the value for value method, that's awesome. If you do send us a boost, I'll read it on the next Bitcoin Bulletin podcast. But I'm asking you to do the easy thing, and that's just to make sure you're following us on Twitter. Again, we're at BTC Bulletin Pod on Twitter. We don't have a lot of Twitter followers, so every one of you that follows us on Twitter makes a significant difference. I also like to hear from you. So if you are following us on Twitter, interact with us on Twitter. Let me know what you think about the podcast. Send me a DM with your thoughts, your ideas, what you like, what you don't like, maybe something you'd like to see me talk about on an upcoming episode, or just simply say hi. Maybe if you're not in one of the top 10 countries, let me know what country you are listening from, because it is really cool to know where you're listening from. It helps me visualize all you plebs out there when I'm sitting here staring at my notes and talking into a microphone. Again, you can also help support the podcast by making sure that you are reviewing the podcast, that you're subscribed to the podcast on whatever podcast platform you are listening to us on. And again, if you don't have Twitter and you don't have Nostr and you do want to reach out and say hi, you can do so by email. I always check our email. I just checked it a few minutes ago. The podcast email is bitcoinbulletin@protonmail.com. Again, I read and reply to every email we get, even the hate mail, which fortunately we don't get that much of. In fact, I can't ever remember actually receiving a specific hate mail for this podcast. But either way, again, follow us at BTC Bulletin Pod on Twitter, or send me a shout out via email at bitcoinbulletin@protonmail.com. But don't forget to listen to us next Wednesday and every Wednesday for our DCA Wednesday episode while we grow that stack together. That is the single most important thing you can do to help promote this podcast, is just be out there and listen. Either way, keep on stacking those sats, you sexy sat stackers.